Dan, welcome to the show.
Thanks so much for having me, Steve.
Well, it's great to have you here. And why don't we go ahead and start by talking about your background in terms of how did you get interested in crypto?
Yeah, definitely. I was first introduced to Bitcoin, as is the case with many folks, years ago. It was probably 2013, 2014. And I didn't buy any at the time. But a good friend of mine, who is now our head of security at the company that we formed later on, had recommended that I look into it. And I would say I was a little bit more conservative at the time in terms of the investments that I was making, but it was a very interesting concept. And so I did stick with it, and I kind of watched the collapse from, Mount Gox perspective and the fallout from that. And that just reinforced for me that I didn't necessarily want to dive headfirst into it. I wanted to dedicate the time to understand what was going on. And I did do that. It was years later, but I'm happy to say I didn't miss the boat. In about 2015, late 2015, I started looking at projects that were tangential to Bitcoin. Litecoin kind of piqued my interest, and a few other altcoins, including Ethereum, and I'm sure we'll talk more about that later. But I started to see the potential, and I wanted to get some sort of skin in the game. And so I started investing personally just to see if I could play around with it. I was sending, various crypto to, different wallets, kind of testing it out. And it was kind of neat because I was used to this experience of, you want to wire money somewhere, it's going to be a number of days. And so it just felt right to me. And so I wanted to get a little bit deeper into the space, take a bigger position. And so I started diversifying, not just Bitcoin, but a number of other assets. And I, I fell down the rabbit hole, more or less. And so at that point, maybe 2017, when we were really starting to see a lot of action, I had reconnected with my old college roommate. He had gone into large construction engineering and security projects. So he was doing work with industrial scale security systems for nuclear power facilities, chemical weapon destruction facilities. And I had been in the software industry for some time. And so, we sort of started a pet project at first of mining. And we were using a number of different algorithms to mine. So we're talking about different hashing algorithms, and had different specialized hardware. And of course, it's a little odd looking back on it now, because really that's a game of scale, right? You need a lot of hardware to generate the income necessary for that to be a viable business model. But we learned a lot. We had a lot of fun. And we accumulated a good, kind of diverse portfolio of assets from across all of these different algorithms. And I think that was just such an interesting experience for me that I knew I wanted to pursue something in the space. And sort of simultaneously on the side, or not on the side, I guess it was my primary career at the time, I worked for a company called Anaplan. So I joined them fairly early in their journey. They build enterprise software for Fortune 500 and Global 2000 companies. Basically, you could think of it like an operating and planning, analysis, modeling system for any part of the enterprise. And my original specialty was in supply chain and management of information systems. So, of course, all the concepts in blockchain were pretty interesting to me for a number of reasons in that regard as well. But that I had been working on a lot of sort of supply chain issues that started to intersect with both machine learning and system permissioning, right? So if you look at networks of corporations, say the semiconductor industry is a great example. You have hundreds, thousands of participants in a network, right? Someone's supply is feeding somebody else's demand, and vice versa, all the way through that chain. So it's a fascinating problem because you get this bullwhip effect in today's supply chain, where there's a delay in communication of what demand actually is upstream. So the suppliers experience this delay, and then all of a sudden there's this either glut of supply or a complete lack of it. And so in setting out to try and solve that problem, it was really a question of, well, how do these companies communicate and share data without someone at all of the companies spending all of their time permissioning users from all these other companies. It becomes an exponential problem, and one that software can't solve very dynamically today. And so I got very deep, and this was probably, I think it was about 2017 that this simultaneously happened. I got very deep into the concept of distributed data vending, which was, I think the original use case was pioneered by a blockchain called VeChain. It's a fork of Ethereum. And they were looking at how you could solve these very large, complex issues of permissioning by basically creating this retrieval matrix of across all the users and kind of their relevance to the data that they were trying to retrieve using smart contracts and machine learning. And to me, that was just like, okay, this is going to solve so many problems. It's bigger than everything else that we've done so far. This is one of the biggest revolutions that mankind is going to see. And I wanted to surf that wave. And so that's how I decided that at the time I was going to leave Anaplan. Left on great terms there. They IPO'd shortly thereafter. And then we started a company in the digital asset space serving financial advisors.
So a lot of people will come into Bitcoin from a philosophical belief, whether they're, cryptographers or they're libertarians or they're Austrian economist type people or they're gold bugs. Other people are more technical. So it sounds like you probably were approaching this more because you were technically interested in the technology. Would that be fair to say?
I think so. I think, certainly the idealistic nature of the asset class and sort of preserving and encouraging personal liberties. I mean, that wasn't lost on me. I think
Mhm.
that played a big part in it too. But when I look at any type of market or any type of opportunity, I'm usually asking myself the question of like, how logistically is this going to work? Like, does it actually work, or is it just something that people want it to work that day and that way, and eventually the day will come where it does, right? And I felt like it was a concise package that people could interact with, and it was functional.
So how did you actually pick the financial services space to do this? Because you're definitely a pioneer in terms of trying to connect financial advisors with the infrastructure that they need to be able to invest and allocate to digital assets. So how did you actually pick this particular space to get into?
Yeah, it's such an interesting question. It's one we get a lot. I mean, I'm sure you can imagine because my background doesn't scream, build tools for financial advisors in a nascent industry. But um, yeah, I mean, I think I've got to rewind just a little bit to when we were first pitching this to our early investors. And the way that we were pitching what we were doing was less about advisors, and it was more about this fragmented sort of ecosystem that was already present and where we thought it was going to go. And the big story there was the trend of tokenization, and that there's this more efficient alternative to the infrastructure that we have now. And it was going to affect every industry, every asset, everything was eventually going to wind up there. And we knew there was some time, obviously there's still some time before a lot of that is realized in a particularly significant way. But I think when we were trying to pick apart that issue, it was sort of like, well, we didn't want to play in the custody or the exchange space because they at the time they were already commoditized, and they're even more so now. I mean, it's heating up, it's a lot more, and I think that's a race to the bottom, right, for those services. Um, but when we took a step back and we say, well, how do you cover the most ground from an adoption perspective when this really does get ripping and roaring? And the answer was, you don't try to convince the global public of the merit of the efficiencies of being able to do clearing in less than T+3, right? It's hard to articulate that to people, right? And so if you're looking at the total opportunity here in trying to dissect where that's going to come from, the biggest wall of money or the biggest wall of change in financial services, it's going to come on the institutional side. And the nice thing about RIAs is they're fiduciaries, right? So at some point we knew it was going to flip from you're a fiduciary, so you can't touch this, to you're a fiduciary, so you have a responsibility to look into it at the very minimum. And we knew the more people looked into this, the more they were going to be like, wow, okay, yeah, we get it, and understand the investment thesis and kind of iterate from there. So it just made sense. It was a white space. Fiduciary, I mean, we did a lot of interviews. We did a lot of research. We're software guys. So we're really, really big on voice of customer and understanding what the needs are, not just, I'm a financial advisor and I want to build something for financial advisors. To some extent, we looked at that as sort of status quo, not saying it always is. But for us, we wanted to take a technology perspective because we see this market as fundamentally underserved from a technology perspective. And so that's what we did. And at first, advisors were saying, boy, you've got a rocky road ahead of you. The market isn't ready for this. Who told you that they wanted this? And we kind of brushed it off. We said, well, if people are telling you it's a great idea, you're probably a little bit too late. And so we kept building. And, we had a few years. So this is almost 4 years ago now when we started building this. And of course, with any journey, there's plenty of hiccups, but we found some great partners, and we still have some great partners. One of them has been on your show, Matt Koleski with Harbor Capital. And we built what we knew they wanted to get them into the space, and we filled a void in the market, and we haven't looked back.
So if a financial advisor is listening to this, or anybody that might want to work with you guys, they're going to want to do their due diligence. So tell me more about the partners that you have. Tell me about did you guys get some seed money? Are you like on an A round, or what's the funding behind this? Because I think you just said it's taken about 4 years to build this thing. So you're coming out with the product, you've got the product now. So how did you guys support yourself here over the past few years?
Yeah, so early on during the initial kind of heavy build, there was a lot of just funding from the founders, right? It was a project that we were doing on the side when we had day jobs, or a number of us were doing it full time, and just kind of funding that activity. Kudos to the wives out there. But after that, we did raise money a few times. On convertible debt, as is kind of par for the course for companies at that stage, and that enabled us to really stretch it. We had great relationships from folks in the enterprise software space, including founders of other companies, and they knew what we could do, and they believed in us. And every step of the way, I think we reinforced that what we were doing and the decisions we were making were the right decisions. And so it wasn't difficult, even during the crypto winter, to raise more money. And I think a lot of companies kind of fell off the map during that time. But for us, we raised enough and really had a great network that allowed us to keep that going. And even to today, where we have an imminent Series A, probably a few months out from that. And we're also actively raising money now on notes and such. So there's a lot of interest from all types of organizations in entering this space. They see this as kind of, they're looking at comps as it relates to like a Coinbase IPO and everything. They're understanding that there's a real market here. It's an inevitability at this point.
Right. So tell me about the product or the service itself that you guys offer, and where does this fit within the fintech ecosystem?
Mm-hmm. Yeah. So our service is a little bit different than what you would normally see. I think, advisors, they're sort of like, well, if I want to get digital assets for my clients, I just want to buy it in an existing system. Maybe they want to use Schwab, or they want to use Fidelity, or whatever system, which is totally fine. And there are ways that are emerging that you could do that. And you can also get indirect exposure that is not the underlying asset with a closed-end fund structure, like a Grayscale, Bitwise, and they're great products. I'm not knocking them, and they've certainly been formative to the industry. But the structure of our platform is more to be used as, you could think of it like an operating system, a digital turnkey asset management platform. So we're focused entirely on digital assets. And there's 3 different ways that organizations can interact with our platform. The first is if they just want to manage allocations for their own clients in separate accounts. They can construct model portfolios and deploy those clients into those model portfolios. We handle the account opening process with our partner Gemini, who's our qualified custodian. And then once those accounts are opened, they can be managed sort of in sweeping motions, right? So if you want to update a model strategy, you can do so and kind of ripple that across all of your accounts. Something that's very similar to what they're used to today. You execute a rebalance when you make an adjustment to the model. So that's the first avenue is advisors coming directly to us and using our platform. The second avenue, and perhaps the most important at this stage, is the separately managed account route, where an RIA, and Arbor Digital is one of the examples of this. We have several on our platform now, where they're managing the assets, they're handling the onboarding, they're doing kind of everything soup to nuts, right? And they're allowing these firms who want to get exposure but don't want to spend a disproportionate amount of their time learning the asset class, managing the asset class, keeping busy with other things and gathering AUM. They can outsource everything, and the SMAs know what they're doing, and that's attractive in the marketplace. And so we provide an operating system for those SMAs to launch their businesses, and we have entirely digital asset management businesses running as SMAs on our platform now, where there's not really any other place for them to do that today, and they can onboard other firms, onboard clients underneath those firms, and then onboard accounts underneath those clients. We're talking about individual accounts, joint tenants, tenants in common, trusts, IRAs, and corporate accounts. So, we really are getting to the point where I think, the market is ready. They're just looking for the right vehicle to enter. And then I guess that the last sort of approach here is it's a little bit of a mix in that it's the managed accounts format where a firm would onboard, but we do have partners. We work with Columbia Advisory Partners. There's a couple offices, one of them in the Pacific Northwest, and they help firms get up to snuff on compliance, disclosures, and kind of white glove service, get them on the platform and help them along in a repeatable fashion. So that's sort of the outsourced CIO approach, and they also do model delivery into those environments so that those advisors don't need to do portfolio construction, but they can still have total control over the accounts.
Okay, so it sounds like there's two main services here. The first one is what I would say is advisor as portfolio manager, essentially, where you have the infrastructure. The advisor says, hey, I know about digital assets. I can manage this, but I need your platform. So they're going to use your platform. They're going to put their clients' assets on there. And then the advisor is going to decide, am I going to buy Bitcoin? Am I going to buy Ethereum? Am I going to buy Litecoin or XRP or whatever? So that's kind of part one. And then part two is this separately managed account where you have someone like an Arbor Digital or another firm who has expertise in managing digital assets. And the advisor says, I'm going to pick Arbor Digital, or I'm going to pick Willow, or I'm going to pick some other firm who's on your platform. I'm going to move my client's assets over there. And then that firm is actually going to be making the buy and sell decisions. So I'm letting them be the manager of the account. Is that
That's correct.
Good description?
That's exactly
okay.
Right. Mm-hmm.
Okay. So a couple things then. One is, how do you determine which digital assets are you going to put on your platform? What kind of due diligence do you go through to determine whether we're going to add, this digital asset to the platform or not?
Yeah. So I'd say that evolves over time and has evolved. It's a fine line that you walk, right? Because you don't really want to say, I'm going to prevent you from accessing this asset, because really it's on the advisor or the SMA to determine what is a suitable investment for those clients. But to some extent, you don't want to let everything through the gate, right? We didn't want anything that had the potential to be an unregistered security, for example, because that's a very big risk for everybody involved. So that was kind of one of the criteria that we look at, and thankfully, Gemini has a pretty frequent review cycle with the New York Department of Financial Services as part of their BIT licensing, and so they review all of the assets that they add, and we have a process where we review the assets that are available on their side from a custody perspective, and it's sort of if there's anything that we're going to kind of lob off the top, it's going to be things that are more suitable for retail investors and less so for institutional investors. We haven't seen too many so far that seemed like they were just totally out there. But if they're a little bit more fringe, it's okay as long as they have the requisite liquidity. Because I think that that's the other big issue, right? You don't want to put things on the platform that are going to land anybody in hot water just because the market's too thin. And so I think that those are probably the two big things: is not so much just the perception of the asset, but really, is it potentially an unregistered security, and also does it have the requisite liquidity for advisors to trade on behalf of many clients?
So is your universe that you choose from, is it what Gemini makes available on their platform? Is that like the universe you choose from?
Yeah, so today that's the universe that we select from. So we're a subset of what Gemini can offer on their platform, and a big part of that is sort of a function of, when you look at the regulatory landscape right now, uh, there's not much clarity on how digital assets can be treated differentially from traditional assets, so that the chain of custody still matters a great deal. So when you look at, if I wanted to access assets on, say, another platform, and I'm an advisor, well, most of the clearing that happens today is still self-clearing, right? So it requires sending crypto from one place to another, in which case it leaves the custody of the qualified custodian. And all this, all of a sudden you have custody and you run into that issue. It's a non-starter for most firms, because most firms, 95% of them don't want to take custody. And so when we looked at what's the first iteration of this, because it will change over time. It will definitely change over time. But the first iteration was, how can we get people compliant and still able to do this? And the answer was, it needs to be tightly packaged. It needs to be something where everything's occurring at a qualified custodian. No one's breaking that chain. Nobody's transferring crypto in and out of client accounts, because then you get into, outside of the banking system, and you definitely have custody there. So we had to lock down all of the crypto withdrawals, and really just make the on ramp and off ramp just into the verified bank accounts of those individuals, or brokerage accounts that the money was coming from. And so there are some restrictions in that regard, but they're necessary restrictions today, because if you look at the regulation that's in place now, it's not built for these systems. So until we get clarity, it's better for the advisors to be careful about this and follow a best practice that basically keeps them in line with the status quo, while still participating in this asset class, which is emerging in a big way. And so yes, we do have that subset, that universe of Gemini, but I think that's a that's a benefit to the advisors today, just in keeping them compliant, because most of the assets you look at, I mean, they're covering most of the bases there in terms of what you would want anyway.
So are you saying that if I'm a consumer and I have some existing Bitcoin or Ethereum, how do and I want my advisor to manage it through your platform, what do I do with my existing Bitcoin or Ethereum that I own? How can I get it to you or to Gemini so that it can be managed with that on ramp there?
Yeah, so you can, during the initial account opening process, if they have an account existing at Gemini, that account can be moved into the institutional environment under the discretion of the advisor. So that part is, I think, a little bit easier to describe here. Now, the other side of it is, if you have, Bitcoin or Ethereum or any other asset at another exchange or another custodian, you can deposit that the same way that you normally would, from a crypto perspective, into the wallet that it corresponds with the sub account. So the sub account would need to be created in your name, and then the transfer would occur similar to if you were to send Bitcoin to any other wallet. But it's really the withdrawals that become the issue, right? Because when it's coming from the client, they're initiating the transfer, right? There's no one that's doing it on their behalf if they're depositing it into the account that the advisor is going to manage. It's once it's in the account, you really need to lock it down, because, I mean, let's face it, an advisor, if they decided that they wanted to just go rogue, steal all the crypto and disappear off the face of the earth, that's a real risk. I mean, that kind of stuff has happened before crypto was a thing, right? So I think the security aspect was really big, but deposits can still occur. from
Okay.
really any other location.
All right. So make sure I'm clear here. So we've got the money in the account and it's being custodied at Gemini.
Mhm,
Now, so these are so not your keys, not your coins kind of thing. So the keys are in the name of Gemini.
mhm.
And if the client wants to cash out, they want to convert to fiat, let's just say, how does that happen?
Yeah, so I mean, if a client wants to cash out to fiat, it's as simple as just communicating with their advisor that they want to be rebalanced. Whatever amount they want to cash out, they can rebalance to cash, and whatever amount of cash they wanted to remove, they initiate a withdrawal, and it goes back to the bank account that funded it. If there isn't a bank account that funded it, it came from crypto, then there would be a process where they would add a bank account on file. It would be verified to belong to that individual, and it would go back out to that account. If they wanted to cash out crypto, I say that everything's locked down, and it is, but there is a process you can go through, right? So if a client says, I want to fire my advisor and just take my crypto and get full control, they could become an independent account and get full authority over everything in the account. They could transfer it wherever they want, and that's totally fine. They could also submit a request that would initiate a withdrawal of the crypto to an address of their choosing. But I think that the key thing is just by default, all of this stuff is locked down. There are processes to get around it for the appropriate situations, but by default, you really have to have the rest of it on lock for
Okay.
everyone.
And again, just to be clear, I'm the advisor. What prevents me from doing a rug pull and boom, I'm, you know, out to Malta or something with all this crypto? What prevents that?
Yeah, so at the custodian, so over on Gemini, the advisor can't initiate withdrawals of crypto from those accounts. It's just not something they can do. That's shut down in terms of functionality for them. They can still trade the accounts and have discretion over the client accounts, but they can't withdraw it. And it would require, the proper paperwork, a signature from the client, if they were to initiate a withdrawal of that crypto and have the requisite information for the transfer. So the advisor just can't do it. It's plain and simple. It's locked down.
Okay. Now, I know a lot of these clearing firms, or not, well, not necessarily clearing firms, but exchanges,
Mhm.
they charge people that come up with these cryptocurrencies, they charge them a fee to be listed on their exchange. So in your case, do you guys charge anybody any fees in order to be listed as something that's available to invest in through your platform?
No, we don't. Our entire business model is oriented to the success of our advisors. So we don't have any charges in terms of listing. We don't charge any of our partners for anything. We have a flat pricing model, especially when it comes to SMAs. So we charge basis points on AUM just like they do, and so we're all incentivized towards the same goal, which is grow the business, grow the allocations to digital assets, and build the best tools that we can. We have no other forms of revenue, and we want to keep it that way because we want to incentivize the space to grow the right way, rather than nickel and diming the rest of the ecosystem. We want to expand access and align our incentives.
And so what is the fee schedule?
Yeah, so we have there's the retail, or not retail, but I guess direct to firm schedule, which there's various breakpoints in there, depending on what kind of AUM you're talking about. But the all in cost is going to be 199 basis points if you're talking about kind of the soup to nuts platform access for an advisory firm that's coming to us direct. And as soon as they load assets on, that kind of precipitates downwards. And then on the SMA side of things, you're looking at pretty steep discounts, mainly because firms that are coming to us directly, they have a higher cost due to the service profile, right? We need dedicated personnel to make sure that they're successful. We it's not just support; it's kind of customer success and all the PR and everything that comes with it. Um, that's that's a higher cost to serve for us than SMAs, because when we sell to SMAs, they go out into the marketplace and then they have sales cycles with advisors, right? So it's a very scalable business model for us in that regard. So when it comes to SMAs, they get a pretty steep discount. At times can be more than half. We have standard pricing there, so it starts at 100 basis points, and it can get down to 50 today, just based on the amount of AUM that they're putting on the platform, and more so over time. We're expecting fee compression. Um, I think our perspective today was and has been, don't destroy value when it's still there, right? Price appropriately for where the market is. Don't race to the bottom prematurely, because that can be detrimental for the ecosystem. We serve only in digital assets, not traditional. So the cost of doing so is higher. It'll go down. But right now,
Right.
we feel like we're priced pretty competitively, and we're seeing that the market is responding accordingly.
Okay. So again, make sure I'm clear. If it's the SMA product, it's probably somewhere around 100 basis points, and it can decline from there depending on how much the advisor has. If it's the advisor working direct with you, the advisor as portfolio manager, so to speak here, that's 199 basis points. So then the advisor, whether it's the SMA or the advisor acting as portfolio manager, they have to add their fee on top of that, correct? In order for them to get paid. So if they want to make 1%, then maybe it's closer to 3%, 300 basis points in the advisor going direct to you. Is that accurate?
That's right. Yeah. In a lot of these there's not a whole lot of standardization in fees today, in terms of what people are charging to manage it. You still see like a 2 and 20, or you see a 1 and 20, or you see a flat 1%. It's really up to, the SMA or the advisor, and what they think this is bringing to their clients, and what their strategy is and how they can articulate it. But we stay out of that process. So we say, here's our pricing. If you're an advisor, you can charge whatever you want, and we're not going to get in the way of that. And if you're an SMA, you can charge whatever you want. We're not going to get in the way of that. At the end of the day, we try to ensure that we're not getting over that threshold of 3%, because really that's where you start getting into some hot water. It's like, yeah, is this really appropriate? But I think to a great extent we've been able to do that, and firms have been able to find ways of serving their clients in this asset class without breaking that limit. And I think that that's probably going to be key, to make sure that people aren't getting gouged here. Regulators are going to come in, they're going to look at it, and they're going to say, is this fair pricing practices? And we want to be able to say yes. And I think today, we haven't really seen too many issues there. There's still a great premium on this asset class.
Right. Now, is your company set up as a registered investment advisor as well, or are you just purely a software technology platform?
It's the latter, yeah. So we are purely a software platform. We don't we don't advise anybody. We remain very agnostic. So if an advisor, an RIA comes to us and they say we're looking for an SMA, we refer them to our SMA network. We don't make any recommendations as to selection. We also don't make any recommendations as to the assets that people are buying. We want to remain as agnostic as possible, and so we're just building kind of picks and shovels infrastructure for firms to scale whatever offering they choose.
Okay. And longer term, which of your two main offerings do you envision will be the most popular, the advisor managing the portfolio or the SMA route?
I think that in the future there will likely be a convergence. Like right now, the SMA route, I think, in now to the midterm, that's going to be the big area is the SMA route, just because it's so new for so many people and they don't know how to do it, and they need somebody else to walk them through it. Uh, in the future, we're talking about a little bit longer term. The convergence would be, similar to what you see today with a lot of entities that are, a lot of different money managers, a lot of different asset managers out there, where there's a little bit more free flowing kind of liquid between managers approach, where advisors can come on board and they can deploy their clients fractionally into different money managers, very seamlessly in one platform. In which case, I think advisors will become a lot more comfortable with sort of owning that process. But I see that convergence to a more of a regular model marketplace setup occurring over time now. We have the SMA marketplace, but model marketplace, I think, is where a lot of this is going. And just to make a comment on that, I think that's really going to be in the cards when we have regulatory clarity on how smart contracts can be used to do a lot of these things. Because if you can have, asset managers or advisors that are kind of powered by smart contracts, and the custody issue isn't, an issue anymore, we're going to see a lot more democratization of financial advice and asset management. And I think that that's the goal for us.
Would you say that the service that you guys offer is most similar to, say, an InvestNet? Or is there any comparison to what you guys do to another company in the traditional fintech space here?
Yeah, we're a little bit of a combination of a few different things. InvestNet is a good example in terms of model construction and delivery. I think you kind of look at like the Orions of the world, and from a reporting perspective, and from an execution perspective, and user access perspective. I think we've got a lot of elements for that as well. Um, we've wrapped a lot of things into one product, and we tried to make it as self-sufficient as we could, but inevitably you do run into issues like integration into the current stack, right? Where it's advisors want to get, and their clients want to get, a holistic picture of what's going on. And we offer, the access. I mean, it's obviously there's reporting, uh, robust reporting for the SMAs or the advisors that are managing directly in the platform. We also offer access, if someone did outsource or hire a sub-advisor in SMA, they can get access to look at their clients that are being managed by the SMA. So they can get in there and view that. And we're rolling out direct client access here soon. The clients can get direct access on Gemini today to view their accounts. But I think the holistic view of the portfolio is important, even though we see most traditional assets eventually migrating to this architecture. I mean, you still need a comprehensive view now, and especially if you're going to rebalance across asset classes and money's going to move in or out of digital assets, needs to be a way to do that. And so these are all problems that we're working on now. We're doing a little bit of a crawl, walk, run. I would say that right now we're at walking, and we're close to running here. So, but those providers are sort of waking up to the fact that this isn't going away, and there's a lot of opportunity here for them as well, being early to the game. And so, we've been working with a few of them for a little while here, and expecting to have some great news on that front forthcoming.
Yeah, well, speaking of those firms, so you've got the InvestNets, you've got Orion, you've got Schwab, which is starting to
Mhm.
make some noise here that they're going to be doing some things in the digital asset space. Fidelity, of course, has been in this area for years now. So, what do you think is your longer term plan? Are you trying to become the independent version of an InvestNet or an Orion, or are you thinking, hey, maybe we're going to get acquired someday by a Schwab or an Orion or an InvestNet? What's the longer term plan so that people listening to this are going to have some confidence that you guys have the legs under you to really thrive long term?
Yeah, it's a great question. So I'll just preface it. I'll kind of start from the end and come back a little bit. So our intention certainly isn't to get acquired. We believe in the cause, and we want to bring it as far as we possibly can, and get as big as we possibly can. But you always have an obligation to your shareholders, and your employees and everybody else that's been involved in the journey. That if there's a way to scale your ambitions even further with the resources of a much larger company, you got to entertain it, right? And so from that perspective, that's always something that we'll do. But if we look at right now what's going on versus maybe fast forward a year and a half, when a lot of these bigger players start to enter the market in potentially a similar way, um, technology is notoriously difficult to build a moat around, right? Patenting software in particular is not a very effective venue for protecting it, right? Because you're basically giving the blueprints, and anybody else could look at it and they'd say, well, now I've got the blueprints, and there's no way you can prove this is how I'm doing it either, right? So a lot of these things have to remain kind of trade secrets for how you're orchestrating things for that reason. But I think the moat that you normally build as a software company is in your ecosystem. You need to develop an ecosystem early, or else you're at great risk of someone just taking you out with just purely having more resources than you. And so I think our focus has really been building the base layer of infrastructure for the ecosystem to thrive without us being the drivers of that. So by creating this sort of platform where SMAs can start scaling their businesses, it creates a stickiness, right? Same with the outsourced CIO approach. And it's that stickiness is what you see with like where InvestNet is with traditional assets today. But momentum matters, and how early you get in matters. And then I would also say, and I say this frequently, this is a revolution that you can't do part-time. So if you're focused on, 98% of your time is spent on traditional assets and you've got 2% of your resources and time spent on digital assets, this is happening very quickly, quicker than even we thought it was going to happen. And so if you're not pushing this forward as your number one agenda, you're going to get left behind no matter how big you are. And so for us, we're just looking to innovate as quickly as we possibly can and get the maximum value that we can deliver to our partners and to our customers. We're doing that, and we're going to continue to do that. And I think it remains to be seen, right? I think there's certainly some threats out there in the market that are continuing to emerge, but I think at the time being, we've got a pretty strong showing, and we're seeing new customers every week. So I think we've got the momentum to continue to take this forward into the future.
There were a very small number of financial advisors that were early to the digital assets. What are you starting to see right now? Here we are, 2021. Are you starting to see a lot more interest? What do you think is starting to change advisors' minds about, hey, this is something I really need to be taking a look at?
Yeah, I think Bitcoin was a tipping point, certainly. I think when you had organizations like Morgan Stanley and Goldman Sachs and BlackRock start talking about Bitcoin, it legitimized a lot of this in a way that, I mean, just nothing else could, right? People said, okay, this is mainstreaming, and that was for Bitcoin. And I think Bitcoin was sort of as a tipping point very interesting because it was easy to digest. People said, "Oh, it's a better version of gold. It's a gold I can actually spend, and I don't need to lug around all these gold bars." And in that way, it just sort of started eating those allocations, cash allocations too, and everything, rising against the dollar and whatnot. But I think what's happening right now is we're hitting the early majority for Bitcoin adoption. We've crossed the chasm there, and we're seeing the early majority. But the innovators and kind of earlier stages of adoption are starting to occur for some of these more, I don't want to say obscure use cases, but essentially the more fully featured ones, right? Bitcoin is probably the most secure database in the world for transferring value. But when you look at things like Ethereum, the kind of usage that has today, it has real staying power. I mean, talk about network effects, talk about a sticky ecosystem. If we're talking about NFTs, which are all the rage right now, if we're talking about decentralized governance, if we're talking about decentralized finance, there's so many different use cases, and they all have these different ERC standards or formats for basically introducing these assets. I think institutions are waking up to the if we can't beat them, let's join them mentality here, and realizing that as Ethereum, if we think about it sort of like a digital oil, or any of the other smart contract platforms for that matter, even though they have less usage, it's still very compelling in that all these things are going to be rebuilt. You're either the one that's rebuilding them on this more efficient infrastructure, or either one that's going to get left in the dust. And I think that's what we're seeing, sort of an awakening to right now. I think that's really the driver today.
So along those lines, with everything that's happening with the tokenization and basically the rebuilding of the financial infrastructure, but in a digital way, because the existing financial infrastructure is, many decades old, written on, basically obsolete programming languages. And now you've got a generation, a Gen Z, which basically has grown up on their phone. They're growing up in a crypto world as opposed to a fiat world.
Mhm.
How do you think that's going to impact the financial advisor role going forward? And is it a threat to the financial advisor business, or is this just like the biggest opportunity financial advisors have seen over the last several decades?
Yeah, I mean, I think I've had this conversation a number of times. I think right now it's a tool for firms to send a message during the largest generational wealth transfer in history that we're not going to try and, you know, woo you, millennials and Gen Z. We're not going to try to woo you with wood panel boardrooms and gala events. It's not about that anymore. I mean, there's the shimmer associated with that. I think is just not something that younger generations are interested in. But what they are interested in is that their advisor is more up to date on technology and better understands technology and where the future is going than they do. And so I think that right now it's a tool to send that message to the market, which is going to be great from an AUM gathering perspective. Now, moving forward with, robo advisory is on the rise, and you have, sort of more financial independence that can be realized in the crypto ecosystem that you didn't have before. But I don't think that changes the role of the advisor. Because just because you can do it doesn't mean that you're better at it. Plenty of people losing enormous sums of money in the crypto markets because they don't know how to approach it. So advisors are still as critical as they were before. But what I do think that is going to happen here is the friction associated with delivery and consumption of financial advice by individuals from advisors or independent broker dealers or wealth managers, that's going to be democratized and the friction is going to be greatly reduced. And in that scenario, the competition intensifies greatly. So your investment thesis, your strategy needs to be very clearly understood. And you need to have a focus on the value you're providing. No more of this, 60-40 portfolio where it's all, mutual funds and ETFs. You're going to have to deliver real value, or else people will just, kind of coalesce around these large communal pools, for example, on the blockchain, of just like kind of broad rebalancing, independently rebalanced assets based on an algorithm. I mean, because there's no reason not to do that anymore. If it's a passive thing, then people will do it themselves. If you're delivering value, people will still come to you, and there will be consolidation in this industry. And I think that that's really why we're excited about it, is because we want to be the place where a lot of that gets democratized for people.
Excellent. All right, Dan. Well, as we get ready to wrap up here, is there anything else that you want to mention here that we haven't talked about yet?
Yeah, I mean, I think for advisors, it's really just super important, and I would say, independent of whether you're evaluating this for your clients or not, don't miss the revolution, right? I mean, we've seen it before with the internet. Now is the opportunity to invest in the projects that are going to be the next Google and Amazon and Apple. And the beauty of this is you don't need to wait until the IPO. You can buy a portion of the protocol, a portion of the network, and you can do that for your clients today. And so your clients are probably going to be kicking you if you don't at least review it. You don't have to engage, but you need to understand it. And there are plenty of resources out there to do it. So if you have any questions, we're always here. But I think the education resources out there are excellent today and very open sourced.
And what's the best way for folks to reach out to you and your firm?
Uh, Send a message to marketing@blockchange.ai. You can visit our website at blockchange.ai.
Excellent. All right, Dan. Well, hey, I appreciate you being on the show.
Yeah, thanks so much for having me, Steve. It's a pleasure.